Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel where we do mostly top-down analysis of different financial securities, and today we are going to be looking at the currency pair Euro USD. As you all know, my top-down analysis is mainly done using pure price action trading strategies. So without further ado, let's get to it. Currently on the Euro USD, I'm on the monthly time frame. And what we try to do from on the monthly time frame is to get our directional bias, as I have always stated. So the question is, where do we think Euro USD is heading currently? So mainly looking at the chart on the monthly time frame, it may seem like Euro USD is on a downtrend. How do I mean? We take this as our low, lower high, lower low, lower high. Try to form a higher low here, but ended up giving us a double top and came down to give us a lower low. However, interesting part on this pair was when it went into a nasty range for a very, very long time. Now, how do I mean? So when this pair got into the zone, we can see that it went into a nasty range, and instead of coming back down to give us a lower low, instead it formed a higher low. Let me take this out. It formed a higher low and broke upward out of the range. So currently, if I'm to zoom in, we can see that for the last 1, 2, 3, 4, 5, 6, 7, or 8 months thereabouts, the euro has been moving mad, moving upwards, so to say. So we can see that it broke out of this range and it's currently moving upwards. So the question is, where do we think the Euro USD is moving to? We can say that it will be this very next strong resistance zone. So like you all know, we don't take trades on the monthly time frame. So even if we know that the Euro USD is moving upwards, then that satisfies our directional bias that we are looking at movement in the bullish direction. So the next thing that we get to do, the next thing that we'll get to do will be to look for a structure of the market. In other words, like a chart pattern created by the market that we can work with on the weekly time frame. Now, looking at the chart, we might not be seeing much other than the fact that the bullish structure of the market becomes even much more prominent, as we can see the market making it higher highs and higher lows, higher high, higher low. But the question is, what structure of the market or chart pattern can we find here in the most recent happening in the market that we may be able to work with or base our ability to get trades, potential trades on? So what I mostly do will be to go to the line graph and zoom in. So from the line graph, we can see a structure here, which I can easily take as an inverse head and shoulder pattern. So somebody will say, how do I mean? So I can do this. Okay. I can take this as my left shoulder. Some people might as well see this as a W pattern. I can take this as my head, and this will be the right shoulder. So, and of course, we all know how we trade the inverse head and shoulder pattern, where we say that once the neckline is broken, then we can start looking for potential pullback to take our trade. So this would be the neckline. So let's go back to the candlestick chart to see if this postulation makes sense. Yeah, so can take this as the neckline, and of course, from what we can see that even on those weekly time frame, there's a clean break of the neckline already. So I can just pull this downwards to come to the wicks. So like I said, on the monthly time frame, I try to get my directional bias. On the weekly time frame, I try to look for potential structure, chart, candlestick chart pattern that the market is currently presenting that I can work with. And then on the daily time frame, I try to get the the most recent trend of the market and maybe to probably see a clearer to get a clearer picture of the chart pattern that had been drawn from the weekly time frame. So the next thing would be for us to go to the daily time frame, which I always call the tradable time frame. And of course, we can see now that the chart pattern is much more visible. So we have the left shoulder, the head, the right shoulder, and the neckline. And from what we can see, the neckline has just been broken. And just like I've explained on several occasions, the inverse head and shoulder pattern to trade it, if we have this according to the textbook explanation, so if we have something like this and the neckline is broken, so all we have to do is to wait for a retest into the neckline and then we can take our trade. So how do I mean? This is the inverse head and shoulder pattern. This is the neckline. So once there's a clean break of this neckline, then we can wait for price to come back to the neckline and then we can start looking for our possible buy trades. But like I always try to explain, most times price does not just get to this neckline and then start heading upwards. Sometimes it comes below the neckline to grab liquidity and can come as far as this right shoulder. So like I always also explain, until price takes out this right shoulder, then the chart pattern remains very, very valid. So of course you can see that this drawing tallies exactly with what we have here on the candlestick chart pattern. So let me take this out as we look further on how we could enter the trade. But for those that have been following me for a while now, you know that I use three basic tools for my analysis: the support and resistance zone, the trend line. So this would be a good time for me to include my trend line. So if I have this as my trend line, let's reduce this. So if I have this as my trend line, I have my chart pattern well mapped out. So the neckline will be acting as my most recent support if price retraces down. If we zoom back, you can see that sellers are already trying to push the price down as we look forward to the London session of those markets. So now, how do we take advantage of the market or of this particular setup? So the next best thing would be to go to the one of our entry time frame, which is the H4 time frame. Of course, even from the daily time frame, I already explained that once price gets into this zone or even breaks below the zone to come and make a touch of another touch of this trend line, then we can start looking for our entries. So one of our entry time frame is the H4 time frame. So on this time frame, I can now even include my Fibonacci retracement tool, which will be from the swing low to the swing high. And nothing gives more confidence than seeing that the Fibonacci retracement golden zone, which is the zone between the 0.618 and 0.5, clearly aligns with the neckline of the inverse head and shoulders chart pattern that we drew from the weekly time frame. So this gives a lot of credence to the setup. So all we now simply need to do is to patiently wait for price to come back into the zone, and then we start looking forward our entries. Or better still, we can patiently wait. Price could get into the zone, come down because a lot of people will be waiting here, could grab a lot of liquidity, come back to make another touch of the trend line before heading upwards. So this is my simple take on Euro USD. I'm making this video at about 5:30 a.m. Wednesday morning. So the London session will open in a few hours. So if you get to come lucky enough to come across this video before then, you can closely monitor it, as this holds a very, very strong potential to give us a good buying opportunity. This will be my short take on the market outlook for Euro USD. So if you're into the trading of the currency pair, can always compare this with your analysis and take full advantage of what has been analyzed here. Like I always plead, if you've gained anything, or you feel that you've gained anything from this particular video, you can quickly hit on the like button and share with others to gain as well. Trying to grow this channel for a while now. Please, it will be cool on your part to help subscribe and give the channel more visibility for subsequent cool videos like this. So have a wonderful trading day ahead, and cheers.